All right, traders, we are back in the green. Ended up making $4,000 in profits today, buying call options into those dips. I'm going to be sharing with you the price action analysis and recapping some of the trades that were made today. We did end up doing puts at our best level possible. You guys know we've been targeting puts at that 443 gap. Right before the market closed, we hit puts, made a quick $1,000 on that one as well for the gap close reversal. I'm going to show you how we ended up making both ways, but the vast majority of the profits was from call options. We have the CPI data report coming out tomorrow. I am going to be explaining to you how I'm planning to trade that. So I'm going to walk you through key technical price action analysis on how we're planning to, trade that on the short side and on the long side. So let's get straight into it. So in terms of Trader Society, as you can see, we came back strong. Yesterday, we had 69 people green, 30 red. Typically doesn't happen, but I was red on the day. That was my first red day in 3 weeks. And then in terms of today, 64 green, 6 red, had a phenomenal green day. With that being said, let's start off with the trading plan and with the key levels. And then from there, we're going to go into, some of the recaps of the trades and stuff like that. So as you know, we've been very, very interested in targeting put options at this gap. There was a gap to fill right here at $443. And you can see there's major resistance right here at $442.60, right? So once SPY filled the gap, I did end up alerting put options, and that alert was sent. That alert was sent literally at the exact high of day. You can search it within the Discord. If you type in 443 puts, you will see my alert comes up right here at 3:50 p.m. And if you go to 3:50 p.m., that was the exact high on the day. So basically when I noticed SPY basically filled the gap and it was at major resistance and this was an overreaction to the upside, I identified that there was a red bearish trend reversal candlestick about to close. So I ended up buying puts, and that was a very, very nice opportunity. And as you can see, SPY is trying to have a reversal from the gap. So we shall see if that's going to be the case heading into tomorrow. And I'm going to explain to you how we're planning to trade that into tomorrow. So in terms of extended hours, we're really not moving too much. The big move is going to be happening in the pre-market tomorrow at 8:30 a.m. So it's like, how do you play that? How do you play the big move? Because I don't want to swing trade. I don't want to gamble. I do believe investing is a real way to make money, but in terms of swing trading, it's more of a gambling side. Now, I do believe there's strategies out there where you can profit swing trading, but they're more rare opportunities. My favorite strategy is scalping and day trading, right? And then I also like to invest as well. So with that being said, in terms of tomorrow, this would be the game plan, man. So I'm very interested in puts, and I'm very short biased up here because there's a gap to fill at 443. SPY has been reversing at the gaps. It's been selling off from the high overbought gaps. There's a lot of major resistance towards this double top of 52-week highs. So I'm short biased and I'm bearish. Now, what are the best ways to play that? Because you do have to play it safe because we've been in a very bullish market since March. The market has been consistently overall going up. If you just, look at a weekly chart on March, it's been consistently going up on March. So you have to be extremely careful with puts. But we are at one of the key levels for puts. So it's like, what are the safe ways to play that? So let's go over two scenarios. Okay, so let's say CPI comes out, right? We're going to use the whiteboard of justice here, and I'm going to explain this to you. So let's say CPI comes out and it has a big spike up, right? It has a big spike up. This is how you play puts. I'm going to give you two ways. So once it has a big spike up, you wait for it to pull back, and then it's going to bounce. At some points, it's going to bounce, right? So once it bounces, that's your support, and then it's going to try to retest the highs. So basically, this is one way you can play puts. When it cracks that support level where it bounced from, you want a nice drop. So when it cracks this support, you want a nice drop. And then when it spikes back up to that previous support where it cracked from, where the bulls got trapped, forming this V, this is where you buy puts. On the retest of that previous support, should react as a resistance, should react as a lower high. You combine that with the idea that it's supposed to overall pull back and crash from 444. I'm seeing very strong signals that the SPY is going to crash from 444. And again, I'm not speaking in terms of after CPI. I don't know what's going to happen during CPI. If I knew and I was certain, I would have made a swing trade, but I'm not doing that. I don't want to gamble and flip a coin, right? But what I am telling you is, if we have a big move up, wait for it to bounce. And then when it starts to bounce back up towards the highs, wait for it to crack that support level. Once it cracks, wait for it to spike back up, retest that previous support channel, and that should react as the lower high. Then we should start to sell off, right? Now, what is another method you can use, and this would be your best confirmation in my opinion, If you see SPY is at a key resistance level, right? Say it hits a double top. This is where, you see this was the level in the pre-market or at market open where, the bulls got trapped and it started selling off. If it was at a resistance level, it started dropping. Or, on the daily, there's a lot of resistance at 444. There's a lot of resistance at 445.70. There's a lot of resistance at 450, right? These are all key levels for puts. What would be your best confirmation possible? Just a 30-minute red bearish candlestick. Wait for a 30-minute red bearish candlestick like this, just a 30-minute red bearish candlestick. If you see a 30-minute red bearish candlestick forming at some sort of pre-market highs, near pre-market resistance, near, the previous support that reacts as a resistance, if you're seeing any 30-minute red candle towards our key resistance levels, that's when you're going to want to try puts. So that's my recommendations for you. Now, let's just go over the other scenario. And in terms of this scenario, that's what I would love to happen, and that's what I'll be looking for to happen. But this would be the other situation as well, right? So just use all that in terms of the information that I gave you. This would be the next thing. Let's say we drop. So let's say SPY has a big drop in the pre-market. It has a big drop. You can wait for it to bounce back up. And then once it goes back to the double bottom zone, you can try buying the dip there. Or you can just wait for it to break above that resistance level. And then when it retests this W right here, you can buy calls right there, right? So basically, it's going to drop, it's going to bounce, and then it might form a double bottom or it might form some higher support. Once it breaks above the resistance level, it's going to start breaking out. And then when it drops back down to that previous resistance level right here, you could try buying calls right here, meaning that previous resistance should react as a support since it broke out. But like I said, I'm mainly short biased up on these levels, and I don't like buying calls high. So I'll be focused more on the first idea. But in terms of this second idea, you can wait for it to crash, wait for it to bounce, and then when it bounces, it's going to form some sort of resistance. Then when it breaks above resistance, wait for it to retest that previous resistance. And then you could buy with expectation that it's going to react as higher support, previous resistance reacts support because it broke out. Those are the two ways that you play this with the whole pre-market flip where the bulls or bears are going to get trapped. Now, what are some other key levels for call options? So in terms of call options, very key levels that you should be keeping an eye on are going to be 440 and 439.40. These are going to be our new key levels. And what did I tell you yesterday? Whenever SPY has been dropping back down to the low of 30-minute wicks where the bears got trapped, it's been bouncing. What have I been telling you? This has been working now for over a month straight. Look at this. Right here, this is the low. The bears got trapped. It had a nice spike. Well, once it goes back to the low, guess who gets trapped again? The bears. Right here, this is the low of bottom 30-minute wicks. This is where the bears got trapped again. It had a nice spike up. Once it goes back down to the low, it had a nice spike up. And notice how the best reversals, like I told you in yesterday's videos, are happening when it goes under and it looks bearish. Bulls who are buying this dip right here at the lows are freaking out because support just cracked. That's literally the best price to buy when the support cracked and when everyone's bearish. Same situation right here. There's a lot of support on SPY at this 440.30 level. Right here, it briefly cracked that support. And then that was the best level to buy calls. What have I been telling you? To buy calls when it looks most bearish, when it's at a key support level, when it's dropping under a 30-minute wick. That's the game, man. It's been ripping off the low of these 30-minute wicks for a month straight. This is how we were able to do so well on calls. So I had lower levels for calls because in terms of these videos, I like to state oversold levels to buy calls and overbought levels to buy puts. I don't, like recommending the higher levels. But one tip and trick I gave within the video yesterday is to just simply pay attention to where the bears are getting trapped, because wherever the bears are getting trapped on the 30-minute chart, once it retests the low of these bottom 30-minute wicks, that's when it tends to bounce, right? We don't know what price that's going to happen at. We do know oversold levels in advance where we're interested in buying, but in terms of where it actually happens at, you just have to wait for it to happen, miss out first, then buy the retest. Miss out first, then buy the retest. We were crushing calls in these zones, buying at 40.70, 440, 40.70, buying towards very nice key dip support levels. It was a phenomenal day, man. We had one guy within the chat said this was going to close at 442. He absolutely crushed this call out. But anyways, man, that's my tips and tricks for calls. wait for the bears to get absolutely trapped by the low of 30-minute wicks. And what are some 30-minute wicks right now that we're looking at? This is a great one, 437.70. This is a nice one, 439.50, right? We just have to be a little bit careful, because if this does flip super bearish, then we're going to want to go with the more oversold call levels. So if SPY does flip super bearish, what are the more oversold key levels heading into this week? 437.60. 437.60 is a nice level where we should bounce, meaning the 438 calls should go back in the money from when they've gone out of the money. 437, 435.80, like we discussed in yesterday's video, and even 434.50. All key and great levels for calls you can keep an eye on, right? And then, like I said, the tips and tricks for calls: look for bottom 30-minute wicks, buy the retest, save 1 or 2 contracts if it cracks to add into, and then you use a tight stop loss from there. You don't want to risk too much after that. But that's the game, man. And then in terms of the bearish thesis, you need to understand we're due for a pullback. So the best level for puts possible is $444, in my opinion. We'll be eyeing 444. It's the 52-week high double top. Now, if it were to go break above that, the next level where we will be interested in targeting puts will be a level that has not been tested yet. And in terms of what that level will be, it's going to be right here. You can visually see if the SPY breaks above 444, the next resistance level is the high of this candlestick right here, which is 445.75. The next level above that will be 450. Those are our 3 levels for puts: 443 to 444 zone. 445.70 has not been tested yet, meaning if 446 puts go out of the money, they should go back to the money. And 450 would be a phenomenal level, because that's where a massive, crazy bull trap was triggered. So very, very simple. I explained to you how we're planning to trade this from a technical view. I don't care about the data, the numbers, or whatever's coming out. I don't care. I trade the chart. I trade the price action. I try to not let other things bother me. If everyone already knows, then it's probably too late. I don't care. I focus on trading the chart, and I'm explaining to you what the chart has been telling me for weeks straight, and it's been working. Calls on dips, calls on dips, calls on dips. Stay away from puts. If you want puts, 443. Guess who hit puts at 443? Guess who was fucking disciplined enough to hit puts at 443 and not get screwed into this massive bear trap? I told you in our last video, we are expecting a run to 443. It could drop first, but overall, we're going to run to 443. Surely enough, it happened. And then when it hit 443, it rejected. In the 0 date expirations from this rejection, from when I sent out that alert, was phenomenal, man. That was a great alert. It went from 443 to, once I alerted it, all the way down to 442.24. The 0 date puts did very, very well. Like I told you guys, as soon as 443 puts go out of the money, or they're at the money, they're likely going to go straight back to in the money and make some profit. So that was phenomenal, man. We're not one of these newbie bears who are getting destroyed in this uptrend. Within this uptrend, we were all staying away from puts, and we were long bias. If you would have read the 30-minute chart, you should have been picking up that it was doing the same exact thing that it was doing yesterday. Very similar pattern and very similar comparison to what it was doing yesterday. Look at this. You have these 2 red candles. Look at this. Red bearish in the middle, red bearish in the middle. Then you have a nice bottom wick. Then you have a nice bottom wick. What happens after that? It starts to go up overall and break out for new highs. It starts to go up overall and break out for new highs. Look at this, man. Let's disable extended hours so it's even more clear and visual to see. This is something that everyone should have picked up on within the first hour of market open. You should have said this. You should have said, I'm looking at yesterday's chart, and I'm seeing there's a bearish 30-minute in the middle, and I'm seeing there's a bearish 30-minute in the middle, and then I'm seeing there's a nice top bullish wick right here. There's a nice top bullish wick right here. This cracked the low of this. This cracked the low of this. A lot of similarities. This closed towards the previous closing of this. This closed towards the previous closing of this. Okay, what happens after that? Your 1 hour confirmation, 1 hour confirmation, 1 hour confirmation, same pattern, same thing repeated. What happens after that? It starts to skyrocket and break out for new highs. It starts to skyrocket and break out for new highs. It forms higher support. Once the high of this 30-minute candle right here, reacts as a floor, reacts as a support, later on after breaking out for new highs, reacts as a floor, reacts as a support. You see that? It's doing the same thing. Look at how predictable this is. All you had to do was catch a pattern from yesterday and say, wow, this is the same exact thing. Look at that, man. We'll go over one more time. bearish red in the middle, bearish red in the middle, okay? And then it cracks, new lows, recovers bullish pin, recovers bullish pin. What happens after that? So with that 1 hour of confirmation, you should be long biased and buying calls. After this 30-minute closes red, you should be buying calls, And then it starts to break out for new highs. Wow, with all this happening, what should you think then? You should be then thinking, okay, well, what's the new best price to buy calls? Well, based off of yesterday's chart, after it got the new highs, the best price to buy calls was when it retested the high of this candle right here. And look, this is the high of this candlestick right here where this red line is. Look, new highs, reacts as a floor, breaks out for new highs, Do you see how predictable that is? This was the same exact pattern as yesterday. Like, come on, guys. It's not that hard to see. You need to trade what you see. If you don't see anything, don't trade. You don't need to know the name of these patterns. You just need to know what they visually look like and what they do, right? This was so simple. Now, there's no way I could have said in my video that it's going to form that pattern, it's going to do this, it's going to do that. But we know what's going to happen if it forms that pattern. You need to be analyzing and studying trends, studying patterns, studying history, and then find ways to confirm that that history is going to repeat itself, right? So how do you do that? Well, you look back throughout the 10-day, 30-minute chart, and you're looking for 30-minute patterns. You're looking for 30-minute trends. It could be one trend within 30 minutes. It could be a 1 hour trend. It could be a 4 hour trend within 30-minute candles, right? So again, we're just gonna make this super fucking simple because there's no reason why anybody should be red today if you're using the information that I'm providing within these videos. Red bearish 30-minute in the middle. Red bearish 30-minute in the middle. What happens after that? It drops and it hits new lows. And then it closes, at the previous closing price of the 30-minute. So when you see that something is so accurately repeating itself for like an hour in a row, that should give you the confidence that that pattern is going to continue, right? An hour is a great confirmation. If you see two 30-minute candle patterns repeating, that should give you confirmation that the next 30-minute candle is gonna continue that pattern. What was the continuation? It forms a green bullish 30-minute candle. What happens after that? It goes up for new highs. What happens after that? It retests the low of the high of this candle right here. See the high of this candle, the high of this wick? It retests it. And that's the new floor. That's the new higher support. What I tell you all the time. When resistance breaks out, it's going to try to react as a new floor, react as support. And it told you that was going to happen right here. And then look, it breaks out. This is the new floor, the high of this. New floor. Do you see how many fucking dip buying opportunities there was? It's like, how the fuck are people going red with what I just pointed out? If you're red, you didn't see that. And you're not aligning yourself with these patterns that I'm teaching you. And you're not going to find these fucking patterns in books. I make all this shit up. I'm trading the chart. I'm trading what I'm visually seeing. It is my job to capture a pattern in real time. And when I see that opportunity, when I'm seeing, wow, this has been repeating itself for like an hour straight. This has been repeating for 2 hours straight. Wow, this candle appears a certain way and this pattern, this trend has been repeating itself. That should give you confidence. For example, what's a great example? Well, this 30 minutes red in the middle, this 30 minutes wick, this 30 minutes red in the middle, this 30 minutes wick, it hit new lows, it closes at the previous 30, the same fucking thing is happening. It breaks out, gets new highs, it breaks out, it gets new highs. At that point, with all that fucking information, you better believe me that I would be more confident than ever that the high of this 30-minute candle, is going to react as the new floor if it drops, because that pattern was consistently repeating itself for a long duration of time. Therefore, the most likely outcome is it's going to continue to repeat itself. And we all knew calls were fucking banking at these dips. So the most likely outcome is when it breaks out above new highs, since it was doing the same exact thing as yesterday, once it retests the high of this 30-minute candle, after it broke out, it's going to form a floor and bounce. I'm putting you on, man. That is the fucking game. I'm going to leave it off at that. If you want to learn how to trade the best setups at the best prices, and if you want to surround yourself with the right network, with the right trading opportunities, this is going to be the group for you. It is the first link down below in the description. Now is the time to invest into yourselves. If you'd like to join and crush it tomorrow for CPI, now's the time to join, man. I'm telling you, we received so many testimonials from members today saying that they've recently made $2,000 to $3,000. They're growing their small accounts. They're doing absolutely phenomenal. They're on their nice win streaks. And we are going to continue to do it because we are capturing 30-minute patterns that no one is catching on to, man. And I'm telling you, once you learn how to master this 30-minute chart along with the 1-minute chart, you're going to be visually entering the best trades you can possibly enter on the day. It's just about identifying and understanding that a pattern is repeating itself and then finding a way to accurately capture that pattern. So for example, what more development do you need? You saw the pattern, you saw the ovals that I pointed out. So if it's breaking above new highs, it's doing the same exact thing it's doing yesterday, and it's been repeating itself for quite some time. So if it's going to drop back to the low of this 30-minute, if it's going to drop back to the high of this 30-minute, to the high of this 30-minute, then that's your opportunity to seize the day, my friends, because you waited for something to repeat. You waited for a pattern to develop. And the opportunity to seize your day with your mindset should have been, I'm going to buy the low of this right here. So if you saw it, you saw it. If you didn't see it, you didn't see it. You have to have your eyes open, and you have to identify when a pattern is repeating itself, right? And this pattern that was forming, that could have been a pattern days ago. That could have been a pattern weeks ago, right? You have to go back and study the 30-minute chart, and you're just simply looking to see if some sort of pattern in history is repeating itself. And then from there, you're waiting for some sort of oversold or overbought opportunity from there, like I explained to you with the high of day. So that's the game. We're going to absolutely crush it tomorrow. If you want to be a part of Trader Society, it's the first link down below in the description. It's a one-time fee. It's lifetime access. You get access to every single real-time trade alert that I send out. You get access to my real-time trade alerts, real-time entries, real-time exits. You get access to the moderators who are absolutely crushing. I'm telling you, the moderators we have, they are truly crushing it. It is unbelievable on how accurate the trades truly are. So if you want to learn how to master the SPY, how to master trading price action, how to master reading the 30-minute chart, it's going to be the right group for you. We're going to show you how to consistently make money within the stock market, and we're going to get you right. We're going to get you green. We're going to put you in the most competent trades we can possibly put you in, man. We're going to show you how to trade the best setups at the best prices. So it's the first link down below in the description. With that being said, you also get access to the video lesson library, the course, risk management, position sizing, psychology, mindset training, along with all the unique trading strategies that I've created. If you want to learn how to trade the chart and how to trade what you see and how to create a plan beforehand where you know exactly what's going to happen and you can prepare yourself to then trade what you're going to actually see with confirmations, it's going to be the right group for you, man, because I'm telling you, what we have is special and the results are speaking for themselves. So I will see you guys within the next video tomorrow, and I will see you, for those of you within Trader Society, live at Market Open. We're going to absolutely crush it. If you'd like to join, it is the first link down below in the description.